Yo, what is good, family? Hope you all are having an amazing day. In today's video, we're gonna break down the setup we had this morning on Bitcoin USDT at the open of the Frankfurt session, and it was a pretty interesting setup. For the new people, if you're new, today is gonna be a quite advanced video. It's more, focused for the people that already have experience with my strategy, since this specific structure was extremely choppy, and the way to understand it is the exact same way as always, but it can seem as a more complex structure simply because the candles were super choppy. It was not a clear trend, and that's why I'm doing this video, to clarify this scenario so you guys can learn, because this can happen literally on any pair at any session that you are trading. So just a heads up and grab your notes. So basically, let's play back for 8 a.m. open of Frankfurt, and basically, as always, the same question: where are we coming from, right? In this case, we understand that we have this last high that creates this last low. We all understand that. That's perfectly simple, easy peasy, right? Now, let's dive deep into the internal structure, because that's what you guys have to understand. Remember that we want to take the first setup that happens, and the first setup that happens is specifically most of the times with the internal structure. So let's dive deep into it. Basically, we go to the upside after creating this low. All right, let's extend the chart, because I'm gonna first of all create the movement with the mouse, then I will draw the same movement on lines right here, and then we will go to the 1 minute, because there is a lot of lessons in this setup. Basically, we have this bearish movement, right? Then right after the bearish movement, market rejects and this candle closes. Then this closes, the next one opens. First goes lower because it's a bullish candle. Therefore, most of the times we have the low being created first. Therefore, we have this movement right here. Afterwards, the market goes up, right? Rejects, closes, next one opens. Goes up, goes lower, closes, next one opens. Goes up, goes down, closes, next one opens. Bearish candle, therefore, first creates the high, then creates the low, rejects, closes, next one opens. Bullish candle first creates the low and then goes up. So basically, the movement that we have here is this. First of all, we have the significant bearish range that we all understand, high that creates the low. Perfect. Then we have this, which is this movement. Then market goes up, rejects, up, rejects, and then goes up, down without breaking this higher low. Therefore does this. Nice. Then without going anywhere else, market goes up without breaking this candle and rejects. Therefore it does this. All right, this bearish movement is this rejection. Now closes, next one opens, goes up and down. Now this is very important. This low is, if you look at the right, 19.32. This low is 19, and this low is 19 also. Therefore, the low that this candle creates is not breaking this lower low, meaning that it's not breaking this low. Therefore, the movement that we have in this candle is extremely small, right? Goes up, down, rejects. We forgot the rejection. Perfect. And then the very next candle goes lower. Now, yeah, breaking this low, meaning breaking this low, and then goes up. Okay? So it does something like this. This is the exact movement that we have. Let's go to the 1 minute. What do we have? Right, we have the high and the low. The high and the low. We have the lower high, lower low. Lower high, lower low. Then we have the high, low, lower high, lower low without breaking this low, high, low, lower high, lower low without breaking this low. And then we have what? This lower high and then the significant lower low. The lower high and then the significant lower low. How interesting is this, guys? I'm sure a lot of you guys are with the brain fried right now. But this is literally how the order flow of the market is done. Literally, there is no other secret. So, understanding this, now you will say, Charlie, but you have more than 3 impulses. Why are you selling on a lower low? Because we have 1, 2, 3. This is an entry for a 4th impulse. Why are you selling there? Because I'm just going to the 1 minute to show you guys how the M5 can read the M1. Not to execute, but to filter. Because if I was trading in the 1 minute, I will not be even showing up the M5. We will just be jumping into the M1. But we go only to the M5 because the M5 filters out the 1 minute. That is the most important part. That yeah, perhaps you're trading a 1 minute structure, but you're not trading in the 1 minute per se. You're trading in the M5 because that filters out the noise, quote unquote noise, of the 1 minute. So what are we doing here? In the 5 minutes, let's delete everything. Let's remove everything but the tool. Fantastic. So what we have here is market going up. Right here, tops up, and then goes lower. This is the movement that we look for the M5. This is literally how we do it every single time in the M5R videos. We don't take this in consideration. That's for the M1, but that's not for the M5. For the M5, we have a high and a low. Then market goes up and then goes down. Why? Because this candle is not breaking previous candle's low. Therefore, we have first impulse, first pullback, second impulse, second pullback. How interesting is that? First impulse, first pullback. Second impulse, second pullback. Why this is the end of the second impulse and the beginning of the second pullback? Interesting. Because this candle makes the second lower low and closes above first lower low level. And also we are on a bearish structure, and that's a bullish candle. We have 2 reasons of why this is the end of the second impulse and the beginning of the second pullback. Therefore, when we are coming to our open of the Frankfurt session, we have the last lower high and the last lower low. Fantastic. So the last lower high is completely valid for a bullish BOS. Why? Because the only rule to verify the BOS as valid is having one candle making the low and a different candle making the entry. This candle already did the low. So the next candle, which will be the opening candle, could potentially give the entry. So it's completely valid. All right. So the bullish pending order, the buy stop, is completely valid, and you should be setting it up right before the open of the session. Now the bearish pending order, the sell stop, is also valid because we have 2 pullbacks. Also another detail, the second lower low didn't create a significant lower low. Remember, we broke this down a few times on the videos. When you have a rule of the third impulse, the objective is that once market breaks the lower low, it goes to take the significant lower low. But it doesn't matter the distance. Right here we have more distance than here, of course. But it doesn't really matter. Yeah, the target is the lower low, but it's not where you necessarily close the trade. Because perhaps when the market takes this lower low and activates the entry, and then goes and takes the next significant lower low, it wants to keep going lower. You don't know that. And that's when we let the probabilities play out. So if the second impulse already breaks the lower low, the entry is not valid anymore for a bearish rule of the third. You must have the second lower low without breaking the significant lower low, or in the opposite direction, having the second higher high without breaking the significant higher high, if that makes sense. So long story short, at the open of the session, market basically gives us the entry candle. Beautiful. Boom, there we go. Automatically activates the bearish idea, so we cancel the bullish one, and now we just stick to the bearish. We can see that the candle that activates the setup is quite steady. It's not like the type of candles that breaks sharp to the downside. It actually consolidates a little bit. Then look how interesting this is. Everything looked like sunshine and rainbows, didn't it? But now it doesn't look like sunshine and rainbows, right? This is the most important part also. A lot of you guys send me trades. Charly, I hit invalidation, you didn't. Why? And then they send me the setup, and I see it. And these guys put the invalidation at the internal lower high. That's the easiest way to mess this up. We have high, low, lower high, lower low. A lot of people, I don't know why, put the invalidation on the internal lower high. Guys, this is the exact reason why I don't do that. Because your whole bearish rule of the third impulse is this. Let's actually put a box. If we put a box, fantastic. Why are you putting the invalidation inside of the model of entry? Explain to me, what is the logic behind? No, because I want to make more risk to reward. Instead of a 1-to-1, I will make 1 to 1.6. Bruh, out. Get out of here, alright? You're taking the decision based on your P&L, not based on logic. If this is your whole entry model, the most logical reason is actually putting the invalidation above the high of the model of entry. Alright, that's basics. Because of this specific reason, you have internal liquidity. The higher high, well, the highest high is the one that has the most strength on this supply area. And then eventually, market goes lower if the price really wants to deliver bearish price action. This is literally it. I mean, back in the day, years ago, I was drawing up this exact same pattern. And this is why I never put invalidations on internal lower highs or internal higher lows. Same thing works for longs. But in this case, it's literally the textbook S scenario for shorts, right? And obviously, the rest is story. Price just goes lower, okay, and melts all the way to the downside. So it's very important that you guys, first of all, understand how to properly take the structure in consideration. Also, understand what will invalidate the bearish rule of the third impulse. And also, always setting up the invalidations at the highest high or the lowest low of the entry model, never at internal levels. With this being said, family, remember that in the description of the video you have the link to my Instagram. You can ask about available spots for the private group of students where you will have access to the intensive course going from 0 to 100 with this exact same strategy. You will have access to all the live analysis sessions that I do from Monday to Friday in Spanish and English. All of those sessions are at the London Open, where I give out this exact same type of ideas with this exact strategy on the live price action. If you cannot see the live session, they are recorded obviously, and you have also access to the private group of ideas where I send all my setups on Forex, crypto, and other markets. So with this being said, family, talk to my Instagram and see you in the next videos. Let's get it.